Hey, what's going on, guys? It's Sam Kwok, one of the Kwok brothers, real estate investors, and today I'm going to show you how Daniel and I generally negotiate and find owner financing deals. Now, this is very exciting because this is actually our first time showing you guys some of our secrets online, YouTube and Facebook. So I was kind of wary at first because I'm going to be sharing some of our secrets, and it is what makes us competitive as real estate investors and how we negotiate for deals. So in a general sense, I'm not going to share everything, but I will share some big picture information that's going to help you definitely. Now, if you want some of the details and some of the more juicy stuff, I'm going to leave some links and resources down below in the link section below. If you're watching this on Facebook, you'll see it up top. I'm going to leave the cheat sheet, right? Our owner financing cheat sheet guide. You guys can download that for absolutely free, where we have a owner financing calculator. It's going to show you and help you determine if what you're dealing with is a good deal or not a good deal. The cheat guide itself, we have a couple questionnaires you can ask to the seller. 7 deadly pitfalls to avoid when it comes to owner financing. Now, of course, if you guys are a part of our training program, you guys will have us as your one-on-one resource. Message us, text us, and call us. If that's something that you want to do, I'll also include that down below in the links description below, where if you guys are interested in our training program, we go over a lot of different real estate investing topics. So you guys might notice our video capability for this video kind of sucks because we're actually packing up to move. So our video studio that we normally use to shoot our videos, it's all packed up and ready to go. I really wanted to do this. I really want to deliver this because this has been so popular over the last couple of days. People have just been asking me, emailing me, texting me saying, Sam, when are you coming out with an owner financing video to cover what you do in a general sense on how to find owner financing deals? So I'm gonna go with the old school method because we don't have the video studio set up. I'm gonna flip my camera around. I have my marker here, and I got some paper here where I'm gonna actually show you old school style. So I'm gonna go ahead and flip this camera around for you guys. All right, guys. So I went and turned the camera around. I hope you guys can see this pretty well. So in a general sense, let's first talk about how do we find the owner financing deals, right? So how do we finding the deals? Now, finding the deals isn't so hard if you have these 3 categories in place. Now, if you download our cheat guide, I will give you a further explanation as to why we're doing it, but I'm gonna give you a general sense. Number 1, we wanna look for sellers who own for at least more than 7 years. 7 or more years, basically. Now, the reason why we want to go with the sellers who have at least owned their properties for 7 or more years is the fact that it has to do with this. It's called capital gains. Now, this is going to be an interesting conversation because, first of all, I am not an attorney, right? I'm not an accountant. So any tax or legal advice or suggestions I talk about, guys, make sure you talk to an accountant, talk to an attorney, which something you should be doing already anyways, right? If you're doing a real estate transaction. So double check with your local and favorite an accountant when I talk about anything that has to do with taxes. So if an individual, an investor, a landlord owns, let's say, a property, and let's say they bought this property 27 and a half years ago, okay? And I'm gonna talk about why that number is so important. 27 and a half years ago, let's say they bought it for $100,000, right? $100,000 27 and a half years ago was quite a bit of money, guys. I'm not gonna lie, right? Now, for some odd reason, let's say now, which is the year 2017, at the time of shooting this video, let's say the investor also sold that property for $100,000. Now, keep in mind, during the 27 and a half years, this property was just straight rental property, right? And they had a great accountant that was representing the investor. Now, if we bought this for $100,000 and 27 and a half years later, we sold it for $100,000, what will be your net taxable income? Taxable, or I should say additional taxable income, right? Because you may already have other income coming in. Now, most of you guys, like 95% of you might have guessed 0, right? Well, the truth is, the entire amount of $100,000 is going to be liable for taxable. Now, the $100,000 is taxable. Now, here's the explanation to that, right? And the reason why I picked the figures of 27 and a half years is because the IRS, Internal Revenue Service, allows us to depreciate a residential property for 27 and a half years as a tax write-off, right? So if this property was worth $100,000, 27 and a half years ago, we call this the basis, right? After the first year, year one, the basis is going to be I'm trying to do the math here. So it's going to be around $97,000. That's roughly, guys, not exact. And how that works is we're going to take $100,000 divided by 27 and a half years, and you get roughly around $3,600, right? I'm just about, I'm not exact, right? I'm just doing this in my head. So that $3,600 could be deducted and deferred from your income. So let's say you made $5,000 from that property, and this is your gross rental income. On top of your other expenses like maintenance, management, vacancy, I guess you can't expend it. In some parts, yes, you can. Property taxes, right, the whole 9 yards. You can also deduct $3,600 as what's called depreciation expense, right? So your net income will be $1,400, right? But here's a cool thing: that $3,600, you know, it's not physical money that you're paying out, right? It's basically on paper you're losing money, right? Now here's the key to that, guys. And I was actually one class away from being an accounting minor. My accounting professor explained that you actually have this bucket called accumulated depreciation expense, right? And the bucket can only go up to 27 and a half years. After 27 and a half years, the bucket cannot, you know, overfill, right? Because the water will basically pour out that way. So if you fill the bucket out up to 27 and a half years, the amount based on this figure would equal out to $100,000, right? Because that's the maximum. If we divided $100,000 divided by 27 and a half years, we get about $3,600. Multiply that back to 2,700, you should get $100,000. Now, the way that my accounting professors taught me, every year you're going to be dumping $3,600, just about whatever your depreciation expense is going to be, you're going to throw that into that bucket. So every year it's filling up, right? So let's say if the seller sold the property at year 10, whatever is in that bucket when it comes back out is going to be considered income, right? That's super duper important. So here's why this is so relevant to the whole conversation of owner financing. And this is meant to be just a tax quote unquote lesson, but whatever comes out has to, of this bucket, if it's the entire 27 and a half years, will end up become $100,000 taxable income. Now, depending on where they are in terms of their tax bracket, they may be owing up to, and don't quote me on this, up to 30% capital gains. Now, on top of that, we also talk about selling costs, right? Which can go all the way up to 8%. So really, right off the bat, 38% is going to be gone, right? From the 30% being capital gains taxes and 8% being your selling costs, right? 6% is going to go to your realtor if you're using a realtor. 2% is going to go for the title expenses, right? Lawyer fees and the whole 9 yards. So if you sold this, you would realistically be only walking away with $62,000 cash, right? Not to mention, let's say you put the $62,000 into your savings account and you're earning maybe 1% interest. You're only doing roughly around $600 a year on interest earnings, right? So here's why this is important. Most sellers do not want to walk away with only $62,000. At that point, they're thinking, well, why not just keep on renting, right? Why not just keep on collecting cash flow? But here's the thing. Most sellers, especially, and I'm not discriminating against age here, but most sellers who are in the older generation tend to manage their properties themselves, right? So they don't want to deal with the tenants, the toilets, right? The worrying, the maintenance, the whole 9 yards. So they want to get rid of it. They want to just be gone with the responsibility, right? So here's how owner financing can help them, okay? If we do something called contract for deed, and often it's called land contract or articles for deed. Here in the state of Illinois, we've often called it for contract for deed. And what this looks like is that that $100,000 sale price, back to the example, they do not have to pay the taxes all up front. Now, they still have to pay up to 30% of the capital gains. However, in a contract for deed situation, they pay only the principal amount. So let's say, for example, we did 20-year amortization at 4% interest, no money down, okay? If we amortize the $100,000 on 20-year amortization, 4% interest, whatever the principal amount is going to be, that's where the 30% capital gains is going to be applied. Now, in other words, they're paying the capital gains taxes little by little in 20-year spread, right? And here's the cool part. This seller may would have had to pay $30,000 in capital gains that next year in the tax, come April 15th, they may have to pay up to $30,000. Now, if there's a 4% interest that's built into the balance of $100,000, that means the seller is going to be making 4% on what they would have owed on the taxes the next year. Pretty darn cool, right? So you're making money off of what you should have been paid to Oakland Sand. Now, here's the key with contract for deed. With contract for deed, the deed does not get transferred over. The deed does not get recorded. A warranty deed is not passed over to you, right? The deed only gets transferred if the principal balance is paid in full. So in 20 years, when you pay off the seller, that's when you're going to get the deed. So in other words, this is a great incentive as far as why owners and sellers would do owner financing, right? Because if we do $100,000 and do amortize for 20-year amortization at 4% interest, the individual may and could walk away up to $160,000 once the 20-year matures. Does that make sense? And the key benefit is that the key here is that they keep getting cash flow every month, right? Per month, but there's no maintenance, right? There's no taxes that they gotta pay. The property tax is on you as the buyer. There's no management for them. You gotta handle it, right, as the buyer. So all the responsibility of ownership goes to you, right? All the seller is doing is just collecting that monthly principal and interest paycheck every single month. Get it? So this is one of the biggest incentive as far as why owners and sellers will sell properties to you at owner financing. Of course, there's going to be questions you're going to ask. There's going to be some things that, this process may change, right, depending on if they have an existing loan or not. If they inherited the property, it could be a different situation, right? The whole 9 yards, right? It can easily change the conversation. So what I'm giving you guys is basic template, basic formula. So let's go back to the criteria that we were looking for. Number one, we were looking for people who owned for more than 7.5 years of ownership, and we just discussed why. We're gonna look for owners that have their properties inside of an LLC or some sort of entity, okay? And the reason why we say that is because I figured that if an individual has their properties inside of an LLC, it speaks sophistication, right? They're more likely to do owner financing, not out of fear, but they may understand it a little bit better, right? If you guys are part of our training program, if you guys are within our, the whole mentorship thing, you guys will understand more about that. Number three is, it has to do more with, I'm losing it. Okay, here it is. The owner's age, seller's age, has to be within 50 to 70s. Now, the reason why I say that is we want them to retire. We want the seller to retire out of real estate, all right? Sorry, the camera's shaking a little bit. We don't want them to do what's called 1031 security exchange, right? We don't want them to do a 1031 securities exchange to another set of properties. And 1031 securities exchange is another tax deferring strategy, capital gains, that is. And remember how we need to use capital gains taxes to leverage the negotiation? So that 1031 securities exchange will also defer capital gains taxes, and the whole point of owner financing will not work. The folks that want to do 1031 securities exchange, they're going to want bank financing or come up with cash. Does that make sense, guys? So, guys, those are the main three criteria. If you guys can find individuals that have had owned the properties for 7 years, have an LLC, and they're in their 50s and 70s, if you have me or one of my mentors negotiated, you'll have about 80% success rate in negotiating and getting the deal turned into an owner financing. This is why 2/3, I'm sorry, I would say more like 6 out of 7, right? 6/7 of our properties are owner financed, right? This is why we're so good at it. Now, if you guys want to get in details, right? If you guys want more of an in-depth help and resources, definitely go download our free cheat guide. That is absolutely free for you. It's a gift for you guys. You guys can download it all you want. I have no problem with that. Now, if you guys are wanting to go super in depth, you guys will be given an opportunity down below in the link description box to work with me and my team, my Inner Circle Real Estate team, and I will show you guys personally on how to do this as well. On top of basically connecting you with my nationwide real estate investment team that will further help you expand your real estate investing journey. So guys, thank you so much for tuning in. Thank you so much for being an audience. Please do subscribe to our YouTube channel if you're watching this on YouTube. If you're watching this on Facebook, please do like us on our Facebook page. And I appreciate you guys watching. Thank you for the support again. And I will be looking forward to doing the next video. All right, take care, guys.